uh, stepping towards the end of the first quarter. Markets open in Asia this morning. Brent is trading at just a little above $110, down almost 2% on morning trade in Asia. WTI the same, trading just below 105. So $5 plus spread between WTI and Brent, which is somewhat wider than it's been generally over the last long period of time. So interesting to note. But generally, prices dropping off for different reasons, but ultimately some talks of potential progression in the Ukrainian-Russia war. It seems to me little real chance of that from anything I can identify. But nonetheless, and also China's coming back to be sort of in the news a little bit. We were highlighting it some weeks ago that the COVID spread out of Hong Kong and into China would start to potentially bite on demand. This is a survey question we asked earlier in March, and 1/4 of the table gathered indicated that China might be something to watch for demand destruction. Let's go to Ed Bell, sitting in Dubai, sitting in the UAE this week, Senior Director, of course, of Market Economics at Emirates NBD. The week in which OPEC Plus are to meet, Ed, and we had the UAE minister probably coming out with some of the more stronger remarks in recent weeks since the war began, with the role of Russia staying within OPEC Plus and the cohesion and the maintaining of this somewhat disparate group of 20-odd countries, but nonetheless now really a sort of embedded part of the global energy matrix. UAE staying well engaged with Russia. Your thoughts on the outlook for OPEC this week and the commentary from the minister?
Yeah, I think it has been very much assuring the market that the integrity of the OPEC Plus alliance is the priority for OPEC Plus ministers at this point. And in fact, just in the last 20 minutes, we've had more comments out from the Minister Al-Mazroui here in UAE, as well as the Saudi energy minister, of affirming the same thing, that oil markets would be that much more volatile or unstable if it were not for OPEC Plus participating in the market with their market management strategies. Our expectation is that on the Thursday meeting when OPEC Plus meets, it's going to be something similar to what we saw at the start of this month, a very quick endorsement of the plan to add, I think it's going to be now a little bit more than 400,000 barrels a day going forward as we get those new higher baseline levels to take effect from May. But from their perspective, the oil market on a kind of physical basis, to their understanding, looks basically the same as it did prior to the conflict. And the imposition of sanctions by the US, the EU, and others, and the sort of self-sanctioning of firms away from Russian deals, it's kind of their issue. The oil market, the oil is still there. It is still available. So you can go out and get it. They're seeing those kind of trades happen between Russian and Chinese, Russian and Indian counterparties. So by their assessment, by the OPEC Plus assessment, oil markets still don't look severely undersupplied. That would necessarily mean a much faster pace of production increases from the second quarter onward.
Lori Hatayan, MENA Director at Natural Resource Governance Institute, sitting in Beirut, of course. Lori, your thoughts on where this puts the Middle East vis-a-vis the conflict, the war in Ukraine, the Russian invasion of Ukraine, and OPEC Plus, which is trying to, as much as it can, stay independent, stay agnostic. Although I do note probably more an investment decision that Mubadala, the major sovereign wealth fund holding company in Abu Dhabi yesterday, stated that they would be holding back from current investments in Russia. No surprise, I would think. None of us would be putting dollars there at the moment. But nonetheless, that was an announcement. Could be perceived as a political move, but nonetheless, I'm sure it's just simply investment. But where, Lori, do you see the Middle East now caught in this with us or against us sort of paradigm?
Well, actually, it was like an easy call for the Middle East. Most of the important countries, relevant countries in the region, are very upset with the US and the US position in the region, and the fact that the US is ready to do whatever it takes for the Iran deal to come true. And especially now that there is one condition that is on the table, which is like to remove the IRGC from the terrorist group, and that is being contemplated by the administration. So that is a red line for the countries in the region. We're talking about Saudi Arabia, UAE, Israel, and basically the GCC countries. So that's why it was very easy for them to be that neutral, at the same time more than neutral, just saying what the Minister of Energy said yesterday, said that OPEC Plus will stay, Russia will remain with us, and therefore this is our decision, and we're going with that into the OPEC Plus meeting, saying that we will continue with our partner. We were together when the world needed us and to stabilize the market, and today we're continuing with Russia. And that is all driven, so just to look at it from a different angle, which is the security angle, that is driven as well by that. They're not happy at all with all these attacks that are happening on the UAE and on Saudi Arabia, and seeing the Americans being kind of just talk without like really taking action, and plus, as I said, contemplating the idea of removing the IRGC from the terrorist list. So therefore, I think, as Ed said, I think they are going into the OPEC Plus meeting knowing exactly what to do. Maybe 13, maybe this time 14 minutes of, or maybe 12 minutes of meeting, continuing the process, and then go out and monitor the market.
Lori, let me just sort of come back to you on this question, which I've been sort of pursuing in recent weeks, is why does China or Russia get a pass? Ultimately, they are signatories of the JCPOA as well. They would be signing on to any agreements that were made in Vienna vis-a-vis redefining the Iranian Revolutionary Guard. Ultimately, China is the one signing a $40 billion agreement with Iran and giving them lots of economic outs, buying their sanctioned oil, etc. Why do Russia and China get a pass on these issues and tying in very tightly with their perceived sort of enemies, if you like, of the Gulf, and yet America carries the burden and the slap?
Because America was the police of the region for years, and they provide the security, and they're the ones that could provide the necessary equipment for the security of the Gulf countries. This is what the US is not doing. The US is saying, thank you, guys. Now I'm leaving the region. You take care of yourself. You go talk to the Iranians. You do whatever. So what is happening actually is like yesterday, you've seen the Negev summit. That was very symbolic, where you see that all the UAE, Bahrain, Egypt, Morocco coming together with Israel, and the US was there as well. So discussing about many issues, but I think there is a new security architecture that is being built in the region, because if the US is going to leave and the country, the region will remain with Iran, that is emboldened by the New Deal, and especially like someone in the chat said that the IRGC will be removed from maybe State Department, but the sanctions will continue. But that is very strong messaging from the US, saying that, because we all know what the IRGC stands for in Iran. It's the military arm, yes, but at the same time now it's the economic superpower in the region, in the country. So once you're giving a sign that, yeah, it's okay to do a deal with IRGC, so then you are really making them stronger and stronger, and they are part of all the smuggling, oil smuggling. Who's selling today all the oil in an illegal way in the market? It's the IRGC. They have control. They take the shipments to Syria. They refine the shipment in Syria and they sell them. And this is how they make the hard currency. So once you're saying, yeah, I will contemplate that, so that is a very bad signal for the region. So that's why they're upset.
Let's go to the US. Mike McGlone, senior commodity strategist at Bloomberg Intelligence. Mike, I wanted to get your thoughts on this idea of that's sort of garnering some noise, is the de-dollarizing of the oil and oil and gas purchasing out of Russia, and also previously we had talk of the Saudis selling oil to China for in the currency of the Chinese yuan. Where are your thoughts on that? Does it have legs? Does it have impact?
It's I think, Sean, it's most significantly indicative of the macro in the space, where the U.S. and most notably North America, including Canada, is no longer a net crude oil, liquid fuel importer is now becoming a massive exporter, up to 20% excesses this year based on Department of Energy estimates. That crossed the threshold in 2018. So yeah, the country that has demand pull for crude oil, yeah, I can price it in that currency. But now, to me, it makes sense. They're pulling away from the dollar. But I do enjoy the narrative of de-dollarization overall when I look at the macro in terms of what's happening in commodities. And you have to look at things like cryptos. Vast majority of cryptos trade in dollars now. They don't trade and are tokens that trade in dollars. They could have gone for the yuan, they could have gone to the yen or the euro, and it all went organically to the dollar. So in this case, it makes sense, but it's also even what Ed said, that Russia oil is not gone, yet the market price for a significant supply shock, it's going straight to China. Like we mentioned, with any clandestine oil, maybe something that's underneath US sanctions, it's going to find its way to get to China. So that's the way I look at the crude oil market. It's way overpriced still, up to 130 is equivalent to about 145 in 2008 or 40 in 1990. And every time the market dropped 80%. Now we have this demand destruction situation kicking in. So I think the key thing to watch in crude oil is it always responds to price. We only had a shock in liquid fuel supply when prices went negative in 2020. And now the prices are very positive, well above cost of production. The key issue for crude oil that's pressured for the last 10 years is North American supply exceeding production. And that's accelerating. So I fully expect prices to continue to wane, particularly as we head into this demand destruction period and a potential global recession.
Ed, your thoughts on that as well, because of course here in the Gulf, all of our currencies are pegged to the dollar. So as we sort of this narrative builds some momentum, is it credible? What is its implications for those that are pegged and are commodity economies selling, obviously in this case predominantly oil and gas?
Well, I think the challenge would be, does a country like the UAE or Saudi Arabia, which essentially imports its monetary policy from the Federal Reserve, which operates in it has its challenges. It's obviously shown some shortcomings in the last 18 months, but has a relative amount of transparency as far as central bank policymaking goes. Do you want to transport that or translate that to the PBOC, which operates for the domestic economy in China, of which your economic linkages might be quite limited, apart from just sending crude oil or petrochemical exports to that market. So I don't necessarily think that it's going to be a very immediate shift, that we're going to see a wholesale move away from pegging against the dollar in this part of the world. Yes, the economic relationships between the GCC economies and China are strong, probably going to strengthen, but that I don't think we necessarily are going to see a total reversal in terms of GCC strategy towards their currencies. It's another issue of, if you sell your main exports and it's denominated in dollars, there's a multitude of opportunities for you to be able to deploy those dollars. There's significantly less to be able to deploy in yuan or in rubles or in rupees if you're trading against in other importing markets. So I think the appeal of the dollar for net exporters of capital, which the region historically has been, and looks like it's going to be again this year with where oil prices are, I think keeps it quite strong to stick to the dollar link.
Laurie, just coming back to the earlier point and sort of following on from that, these restructuring of new geopolitical alliances in the Middle East, and as you laid it out, the photo op yesterday, although the Secretary of State of the US was right in the middle of that group, and was that ultimately the facilitator of the Abraham Accords and so forth, they were signed in Washington, not in Beijing. What is the outcome of, let's say, Russia's return to the region? Of course, they are most pronounced next door to you in Syria. They were the game changer in the conflict there. We saw President Assad in the UAE recently. How do you see Russia's current situation bogged down in this war in Ukraine and their return to the Middle East and the relationships they're building?
Definitely everybody understands Russia's importance in Syria, and we've heard the Israeli officials saying that, look, guys, yes, we support Ukraine, but at the end of the day, we have our national security issue because the Iranians are at our borders and they can fire these ballistic missiles or whatever smart weapons that they have. And the only ones that can control that is the Russians. So we need to really make sure that the Russians are not upset with our position vis-a-vis the war. At the same time, like when Israel wanted to send all these equipments or support to Ukraine, Russia suddenly started criticizing the Israeli involvement in Syria when they fly and bomb sites for Iran or Hezbollah, etc. So definitely, Russia is still important in the region for the security, for the stabilization of the region and not to create problems. But at the same time, I think depending on how weak the Russians will end up with this war against Ukraine, maybe they will decide to have proxy wars in Syria, in Libya, to destabilize and to fire back at all these sanctions that are happening. We'll see, do they have the capacities? But because at the same time, this is their weakest point as well, because someone today can start a war in Libya. So what will Russia do at that time? So can Russia deploy Wagner or etc. to stand in Libya or even in Syria, or because they're so focused there? So I think it's double-edged sword.
I mean, in some way,
in both ways.
In some ways, is this an accelerator? Because of course, all of these pieces were already in motion before the Ukraine conflict. Israel's, as we just mentioned, it's a peace agreement with the UAE was last year, with Bahrain and a few other countries. The sort of realignment of the region in terms of these was already in play. Is this a moment for acceleration, do you think, as we saw yesterday?
Definitely for the Abraham Accords and maybe other even, if you want, arrangements, definitely this will help a lot. And this is what we're seeing. So don't forget, a couple of days before the Negev summit, we had Sisi, so we had Egyptian, UAE, Israeli summit as well in Egypt. Now we have this arrangement. So I think that definitely this Russia-Ukraine war has brought these countries together. But more importantly than the Russia-Ukraine war, I think it's the US attitude vis-a-vis the JCPOA, vis-a-vis Iran, and the signals that US is giving that no matter what, we want a deal, especially when they thought that Iran could replace the 3 million oil and 3 million barrel oil of Russia. So suddenly Iran became very interesting, and Iran knew that they were important. So that's why they were adding more conditions, and they wanted to really benefit from that, knowing that the US wants the deal. Same time, when you see that the US is now rethinking its position, maybe with vis-a-vis Venezuela, all of this is really putting the US in a position that is not of a leader, if you want, a moral leadership or an ethical leadership. And it shows that when their interests are in danger, they're ready to do whatever. And that is not a good signal for the region. That's why this region is coming more together. And that's why I think the UAE, Israel will be really at the center of this new security architecture that will be put in place in the region to face the new challenges that will come, either being Russia, less Russia, but definitely Iran.
Mike, meanwhile, back in the peaceful plains of America, the Socialist Republic is rising, and people are getting, what I hear in California, $800 checks to keep buying oil. We've seen in other countries the lifting of some tax in Europe, 20% tax relief at the petrol pump. In the US, they're doing another way of it, sending checks. What's happening vis-a-vis this sort of impact of this gasoline price and the politics around it?
But I like how you describe the politics, because it is election season, and paying people money for votes, which also increases demand for crude oil and gasoline, is probably not a good way to get prices lower. And the number one issue for almost all politicians in the US right now, particularly the incumbents, is inflation. And that's why you see those silly deals with Iran and cozying up to Venezuela. But, versus why not go domestic? We have the pretty good potential to develop to increase supply in this country a lot, but that's just not the way it's working at the moment. So I look at it as, that's party showing the extremes, but it's the juxtaposed to when President Trump wrote checks to agriculture producers, grain producers, and we got the lowest prices in history. Now we're doing the opposite. So I look at it, though, in terms of the macro, that's kind of minor. California, we consider that the land of fruits and nuts, and when you're from the heartland like I am. But to me, the bottom line, bigger picture is what you're seeing on the screens to me is very significant signs of recession, of slowdown, and potential demand destruction, which has always happened when you have these kind of spikes, these kind of high velocity spikes in crude oil. I use a 100-week moving average, which is basically 4 years. We just went 2x that. That's the most since the 1990 Gulf War. Crude oil went from 20 to 40, back to 20, and it took 14 years to get above that 40 level. And that's when the U.S. was a massive importer. So to me, that's the shift I have as a commodity guy in crude oil. I see elasticity of supply and demand very negative for prices, and then I look over things at the grains. Well, they might sustain prices a little bit higher because of the lack of fertilizer. And then as a macro guy, I look at copper, very, very expensive, and potentially succumbing to a slowdown in China. And I look at things like Bitcoin, no elasticity of supply. So in the macro, that's going to go up over time.
And Mike, the Fed, meanwhile, are apparently, it appeared to be sort of finally coming around to the need to sort of try and tackle inflation, and the signals are for 50 basis point moves coming next. What sort of impact will that have on the narrative you just outlined?
Every day that Jerome Powell gets up and he sees crude oil's higher, the stock market's higher, he's got to be more aggressive. It's just his mantra right now. I'm putting myself in his head. He does not want to go on in history as a person let inflation get out of control and created the bubble in the stock market. So they will jawbone as much as possible. We will get 50 basis points in the next meeting unless the stock market starts going down. That's the key thing right here. The stock market has to go down or the Fed will do something about it, because the Fed has to reduce people's ability to buy stuff. Now, crude oil's done that a little bit, but it's inflationary. So to me, that's what's happening. It's the great reset, highest inflation in 40 years. And that's the unique thing about the Fed is it is independent, and Jerome Powell showing so much, well, it's not perfect, but showing some of his independence. And I fully expect that to continue. That to me is where the puzzle piece will fit in by the end of the year. Lower stock market, lower crude oil prices. Fed will not have to tighten as much as they're threatening right now. That's what I expect.
Let's go to the survey question and see what the view of the room is vis-a-vis outlook for oil prices. Brent crude oil has averaged just around $100 a barrel in Q1. What will it average in Q2? Closer to Closer to. At the moment, we've gone between the beginning of the Ukraine war, we popped massively up into the 130s, then came way back down to 100, then up to 120 on Brent, and now back to 110. So the ping pong is moving around. The average has then been pulled up. We had about an 86 average in January, about a 96 average in February, and about 115 or so in March. But where will we average through the second quarter? With all of these things, all of these moving parts, as articulated by Laurie and everybody else, there's a lot to think about here. So where will the price average in Q2? Closer to which of those? Ed, again, coming back to our neck of the woods, pegged into the US Fed, where does a few 50 basis points, what does that do for this region and the potential global picture, do you think?
Well, it's certainly not ideal to get the kind of pace of interest rate hikes that we're seeing or we're expecting from the Fed this year, with those bigger moves coming over Q2 and getting up to 2% on the Fed's rate by the end of the year. That being said, compared with previous phases of monetary tightening in the US, when the domestic economies here were in much weaker positions, we expect that both the UAE and Saudi, as the two big dominant regional economies, are probably more well positioned to be able to absorb those higher interest rates coming through this year. The non-oil sector looks like it's it's weathered COVID relatively well, coming in with, we expect growth in both countries at about 4% this year. So it's pretty decent, especially coming after the kind of expo-led growth that we had in the end of 21 and early part of this year. But you're also getting the big benefit of a lot of extra cash coming into the GCC economies from the higher oil prices. We don't necessarily think that there's going to be a lot of direct deployment of that into the economies this year through, say, higher salaries or more capital projects, that kind of thing. But maybe you could see a bit more easing in terms of kind of other costs that are imposed here. So the big one that I think everyone is watching out for is you're going to get a little bit of a shaving off of the VAT rate in Saudi Arabia, which went up so much during the COVID period, maybe taking it from 15 to 10% as a potential. It's not necessarily we think that's going to materialize, but those are the kind of steps we could be seeing, or coming in other ways to help offset the cost of higher import commodities, food commodities in particular. So even though, yes, we're going to be dealing with higher inflation, or pardon me, higher interest rates in the US, probably in a position to be able to withstand them and still support decent levels of growth in the UAE and GCC economies.
I suppose we're also benefiting from that point of view with the stronger dollar. Laurie, talk to me a little bit about Turkey. Speaking of these regional alignments, Turkey wasn't in the football team photograph yesterday. Busy, of course, hosting Ukraine-Russian peace talks. Generally, where is Turkey at this moment in this realignment of the Middle East and vis-a-vis that point of hosting the peace talks with Russia and Ukraine? Is that giving it some elevated status and purpose?
So Turkey is trying to benefit from this to the max. So at the same time, they're calling in for this negotiations between Ukraine and Russia, so playing the mediator role. At the same time, trying to go back to the good relations with Israel, so that maybe if there is a pipeline that needs to go from the East Mediterranean to Europe to supply gas, so that could be through Turkey and not through Egypt or through to Cyprus and Greece. At the same time, we see that Turkey is playing along with sometimes closing the sea roads, etc. Playing the moderate a role of facilitator, a role of mediator, a role of being the buffer zone, etc. For Europe. So I think that they're trying to benefit from everything that is happening, and at the same time, like not angering the Russians, not angering the US. At the same time, playing all the cards that they have, so that they would have a role in whatever future there is in the region, and really make it go through. Because don't forget that, again, for Turkey and Erdogan, they have elections next year. So next year is not very far. So from now, he wants to really build that, so that in 2023, he makes sure that his party and himself win the elections. And that will be like the 100th year of the creation of Turkey, the Montreux Conventions, etc. There is a lot of main issues, and he wants to be the victor of that. So now I think he's just like playing all the necessary cards so that he can secure at least a smooth transition until 2023, and that all this Russia-Ukraine war doesn't have a negative spill effect, or any bad effect or negative effect on Turkey, so that he can continue until the elections.
Can I just follow up quickly, Laurie, with your thoughts? I mean, one thing that struck me about Turkey hosting these talks with Ukraine and Russia is Turkey is a member of NATO. Ultimately, we've forgotten about that in recent years because of the very difficult relationship that Turkey's had with its Western allies. But ultimately, it is a NATO member. It did stand alongside all of the others in Brussels last week. How does that play out, do you think, in this new structural alignment? You're talking about the security arrangement, UAE, Israel. Turkey is a member of NATO, a paid-up member of NATO, and yet is hosting these talks with Russia.
Look, I don't know much about the NATO politics. I think I should learn about it more. But as I said, like, Turkey is really being that player who wants to benefit from everything that is happening, playing all the cards. So playing the card that, yes, I'm the NATO member. At the same time, I can talk to the Russians. I can be the one that will be the buffer zone between the European countries and Russia. So they're trying all their cards.
Well, you wonder, I think it's interesting, and I won't sort of burden you with it, but just for thinking about that in this restructured security alignment of a reinvigorated NATO in the world, and Turkey is a big member. What does that mean for the Middle East in a way with all of these paradigms? And not to answer now, but just to think about. Let's give Mike the last word on this with the result of the vote of the survey. Where is the oil price Still, most people in this room are hovering at the $100 level. That would have to come off quite a bit, I suppose, but it is declining. China weakness, we didn't talk about, Mike, a little bit, but maybe you could touch on it. The outlook for China looks quite precarious.
Yes, well, to me, that's something we've been focusing on actually for a few years now. China economic growth is clearly in decline. And now you're seeing the repercussions of a president that's acting more of a dictator. For instance, pushing back on free market capitalism and a lot of the tech companies. And then really, to me, the defining moment was when they kicked out the Bitcoin miners and pushed back on cryptos, because it shows the limits of their enclosed society and lack of free flow of capital, free flow of ideas and things. So people criticize the US discourse, but that's just how you have to, capitalism works. You have to have open argument. In China, there's one person making decisions. So I view that as, you look at crude oil imports peaked around 7 million barrels a day, and last year 20% of auto sales were EVs. Economy is clearly in decline. I fully expect that to continue. Now the rest of the world, for their export-driven economy, the U.S. is a demand pull. The rest of the world's going into recession. Particularly, we see if Russia is going to be absolute collapse, because they're fighting a 20th century war in the 21st century, and wars are economic. Europe is going to go into recession. So where's China going to go? Completely going downward. So that demand pull, incremental for crude oil from China, is clearly peaked. I think the past incremental demand pull from the U.S. is actually peaking and going lower. So I look at crude oil at 90, still very expensive, and the forward curve 1 year out, it's around 80. And that's probably peaked around 90. So I fully expect that by end of the year, it's going to head towards 50. And I see a global recession, and China is going to be suffering the worst. And you know who's going to probably do the best is U.S. commodity producers. Corn Belt, where I'm from, shale, North American, because they have prices right now, in some cases, that are triple their cost of production. If you sell out a year, you more than double your cost of production. Simple rule of economics does not favor crude oil prices and does not favor China in this environment.
Well, it's certainly worth thinking about that idea of peak oil demand in China. We had one of our commentators, Xavier Chen, you might remember at the beginning of the year at our forums, project that China had reached peak oil demand, and that was, his views were somewhat not dismissed, but ultimately people were like, "What? You're crazy." But nonetheless, I think perhaps that in the rearview mirror that might seem somewhat prophetic. Thank you, Laurie. Great to see you. Wonderful to have, and I'm really enjoying. If anybody hasn't been able to watch Laurie's podcasts, she's doing some really great interviews. I would highly recommend it. You can find it on her Twitter and her LinkedIn feed. I know they're in Arabic, but ultimately there is hopefully a translation facility there somewhere. But the settings are so cool, and obviously what you're discussing is really important and really insightful. So Laurie, follow Laurie's podcast. Ed, thank you as always, and Mike, really appreciate your insights this morning. Catch up with everybody 10:30 each morning UAE time. All the best.
Thank you. Thank you, Sean.
Thank you.
Bye.